Hello, it's Mark from Landmark Financial Services Group. We've been talking about the One Big Beautiful Bill Act in a series of videos. I did two videos. One was on the Trump accounts and one was on the 529 plan. And I thought I'd just take a moment and compare the Trump accounts with the 529 plan, just so you get a sense, because some people are wondering if the Trump accounts are really as valuable as they sound compared to a 529 plan. Remember, both of these plans are designed for parents to, or anybody really, to contribute to an account that's established at a financial company, and you can put funds into it. And once the funds are invested in it, you invest it in mutual funds, and the funds will continue to grow over time. Okay? Now, couple of big differences that we got to be aware of. The first, let's talk about the Trump, right? The Trump accounts will get, if the child is born in the next few years, they'll get a $1,000 credit from the government, okay? They will be allowed to grow tax deferred up until they're 18, and then you can take distributions from it. But remember, if it's a qualified distribution used to buy a home, start a business, or for education, if it's used for those purposes, the distribution is still taxed. It's taxed at long-term capital gain rates, but it is still taxed. If it's distributed for any other purpose, it's considered ordinary income, almost like your IRA. If you were taking distributions from your IRA, it would be ordinary income and penalties. Okay? So kind of keep that in mind. Now, you can only put up to $5,000 per year into this account. Now, that's indexed for inflation, but it's $5,000 per year. Now, let's compare that with the 529 plan. Okay? You can, let's begin by saying, you could put lots more into a 529 plan than you can into a Trump account for your child. The distributions are required to be used for educational purposes, okay? But it can be for anything related to education, right? The big difference is that the distributions are tax-free if it's qualified. Qualified meaning it's used for college, K through 12, 20, 12 to 20 grand, K through 12, etc. Okay? And there's no requirement that it be liquidated by the time the child reaches the end of their 30th year. So, a couple of big differences between those two accounts. And kind of keep that in mind. Listen, if you have any questions about this or any other part of the provisions of the bill or any comparison between these two accounts, please reach out to anyone here at the team at Landmark Financial. We're happy to answer your questions. Thanks.